What's up, everybody? Rob here. Thank you so much for tuning in. We broke 500 subscribers recently. Thank you so much for being a subscriber here. Thank you so much for your support. All of you smashing the like button and helping these videos reach more people really means a lot to me. And I know I keep saying that every single video. I keep saying thank you for being a subscriber. Thank you for smashing the like button. I know it gets redundant, but seriously, thank you. I'm humbled by how many people have been supporting me. I'm getting messages actually on my social media, on my Instagram and different social media saying, "Hey, where's the next video?" You know, it's been 2 weeks. And the truth is, it's been crazy. I mean, let's just get real. Precious metals has been absolute insanity over the past 2 weeks. I haven't seen this kind of volatility for a while. And it's very hard to navigate during a time like this. And so that's what this video is going to be about, my personal buying strategy. What has made me a lot of money in precious metals. I want to just give all of my real information out on this channel. And I hope that the reason the page has grown to 500 subscribers is because there is real value in my videos. At least that's what my hope is that there's real. I don't want to make a video unless it's providing genuine value. And if there was a video to watch all the way through on precious metals, I think this is going to be the one, because I am going to be going over I try to stay consistent. If you've watched my videos, my strategy you'll find is very, very consistent. But in this specific video, I'm going to go a bit more into detail. And I know also many of you might read the title down there and be like, why are you calling out Yankee stacking? Why are you calling out another YouTuber? It's relevant to this topic. I'm not just trying to cause any drama, but when you're watching videos on YouTube, it's very important that you develop your own thesis. You develop your own buying strategies, your own selling strategies. You know, take every bit of information with a grain of salt, including this video. And that's why I'm including it, is because he made a video a while ago saying, do this with silver now. And I had publicly said, hey, this might not be a good video. It might not age well, is what I said. And before I go further on that, he's one of us. You know, he's one of us. He believes in precious metals. I like his videos. This one specifically was a bit like clickbaity. And then he did some things where it just kind of rubbed me the wrong way, where he went back and liked an old comment when it fell, then silver fell a little bit. And it was, I'm looking at it, I'm like, dude, that video, your analysis was very wrong, you know, and you're rubbing it. It's like, I have that OCD thing where if something's off, like even if there's like a little thing off on my desk or something, it just bothers me, and it's like nails on a chalkboard. And so I have to address that in this video. It's relevant to the overall topic. It is what it is. All right. So is it too late to be in precious metals right now? Is it too late? Is it time to be buying precious metals right now? Am I buying precious metals? Well, before I get further, I always have to say this. I know it's annoying, but I am not a financial advisor. Nothing I say on this channel is to be taken as financial advice. This is just for financial education, entertainment purposes, not advice in any way, shape, or form. Disclaimer, I have to say that real quick. So, is it too late to be in precious metals? Well, let's first just develop the thesis here. Let's really look at it in a very simple way. The simplest way that I could put it is the options on where to store wealth is very limited. Do you put your wealth in a bank account? Obviously, you put a bit there. You know, obviously, I have a bit in the bank. I have, you know, my checking account, my personal checking, my business, and, you know, the LLC account and all of that. Is it a good idea to store a large amount of money in the bank? You know, when I'm talking large amount, I'm talking it's only FDIC insured up to $250,000. If a bank goes bankrupt, anything over $250,000 is gone. Now, they'll probably get bailed out again, but does that mean that the money being held there is being devalued while it's being held there? Are we understanding what inflation is really doing to our money? And then also, what if the banks could eventually do a negative interest rate? What would happen if the dollar went digital and they decided to charge 1% to hold your money in a bank, in a commercial bank, under fractional reserve banking? A lot of people might want to get that money out quick and they wouldn't be able to provide it. So it's kind of a scary situation, especially when you're in the high denominations in a bank. To be over $250,000 in the bank, it's not insured. And during a time like this, it's a bit crazy because they're printing a ridiculous amount of money. Poof Powell, as I like to call him. And if you watch my videos, Poof Powell is just poofing money into existence. And before a new election, they're probably going to poof a lot more. So from the most simplified view of keeping money somewhere, a bank is not a very good hedge against inflation, because really what's happening is your money is being burned on one end while it's being held on the other. You know, we're losing multiple percentages per year to inflation, and I think that's going to go into hyperinflation very soon. The dollar is very ripe for a devaluation. Everybody likes to talk about, oh, the stock market's going to all-time highs. Well, if you actually valued the stock market in gold, you know, a lot of people forget this. Prior to 1971, when you bought a stock, it wasn't that you were buying gold stock. It was that you were buying all stocks in gold because the dollar was backed to gold. It wasn't until the dollar dropped off of gold that we see these crazy bubbles here, because there's no ceiling. Gold used to hold everything down and say, no, you know, we can't get crazy about this because this has to be backed to something. But once it got dropped off gold, if you actually valued the stock market to gold, it would show that it was down. That's true. If you showed that the stock market was valued in gold, it would show that it's down since 1971. I think it might be down for the entire time of the stock market because it used to be valued in gold. Now we're able to see these inflated bubbles. So what does that tell us? It tells us that the fiat currency that's being printed is being funneled into the stock market. It's printed from the Fed, multiplied by the commercial banks, and then funneled into the stock market. Where do you go to cash that $1,200 check that they gave? You go and you cash it at the commercial bank. Now that money's there and ready to go get wired into E-Trade or wired into TD Ameritrade. You know, it gets put into the stock market, goes to corporations, you know, so the stock market is highly inflated, and what most people aren't realizing is it's not backed to anything. So although, you know, we're seeing Tesla stock going to all-time highs, and I'm still a Tesla stockholder. I hold some tech stocks, and I hold a bit of short positions as well. If you've watched my videos, I short some gym stocks, I short some brick and mortar stocks. I'm big on calls and puts in the stock market, and eventually I'll go over the stocks. I've made a pretty decent amount of money this year in the stock market, so eventually I might share my stock picks, but it's good to know that the stock market, although it's showing that it's going up, the dollar is being devalued. So it's taking more dollars to buy things. It's showing the stock market going up, but at the same time, the dollar is devaluing. So the item that you're buying a stock with, the currency that you're buying your stocks with, is being devalued. It's not that precious metals. It's not that this gold bar went from being 1,100 an ounce to being 2,000 an ounce. It's that it's taking more dollars to buy this gold bar because it's a limited commodity. That's what's really going on. And so when I see the stock market rise, I keep saying the same thing. If Powell is giving away free lemons, if they're printing and printing away a bunch of free money, well, then the goal is to take those lemons and make lemonade before it goes rotten. And our options on what to do with these lemons is very limited. So the first choice is the bank. And I think, obviously, personally, my number is around 20 to 30% liquid in USD fiat currency. We need it to buy groceries right now. I need it to be operating my business. We need it right now. So I can't just say no banking, period. You know, eventually, if it, you know, Bitcoin gets adopted or we go to a different system, then I'll gravitate towards that. But for right now, I say around 20, 30%. That's what I like to have personally in cash. When I say cash, I mean dollars, USD, fiat currency. More than $250,000, having a large sum in the bank is pretty risky, and you are losing money. You have to know that you're losing money year in, year out by leaving that money stagnant in a bank. I know I ramble a bit, but I hope that this is good information. I hope it's worth your time watching this. Actually, when I look at my YouTube analytics, one of the stats that I'm very surprised by is people watch my videos all the way through. And it means a lot to me that because it means that I didn't clickbait you and I didn't put, worthless content out there. And I like to try to simplify everything. But another thing I want to talk about with the dollar here is that when you have it just sitting there, you're losing money year over year. So let's imagine you had $10,000 back in the early 70s. You had $10,000. And at the time, you could have pretty much bought a house for that. You could have bought I always say this same analogy about a muscle car. You get a brand new Camaro, a 1968 Camaro, and those were that was the car back then for I think it was 2,000, 3,000, 4,000 max. If you gave them that cash and you kept gold, the gold would be worth upwards of $50,000, $60,000, $70,000 for that same amount from 2,000 to 4,000 in cash back then. Now, if you'd given them gold for that car and you kept the $2,000, $3,000, $4,000, whatever it took to buy the Camaro, what are you going to buy now? What car are you going to buy now in 2020 for that same amount? What's $4,000 going to buy you in 2020? What that shows you is that the dollar has lost its value. Since the inception of the dollar, it's lost 99% of its value. It's pretty crazy. So yes, the stock market is rising. Yes, we still use this for our day-to-day transactions, but it's being dramatically diluted. So as an option to store your wealth, I consider it a lemon that's rotting. And I gotta play hot or a hot potato. That's what I consider cash. I consider it a game of hot potato with high stakes. That's genuinely what I think of cash. So the next option that we have to store our wealth would be real estate. And is it a good option right now? I'm sure there are some great buying opportunities out there, but I'd imagine a lot more are going to pop up. I consider real estate to be a bit of a risk. Now, I'm not against real estate, especially if you can turn it into a cash flow property, which is my ultimate goal. I mean, I'm not at the levels yet that I want to be. So if you're a subscriber here, you're kind of watching me grow with you guys. But real estate is going to be a very risky place, especially in this environment, especially in commercial real estate, because we are going to see a ton of bankruptcies. We're already seeing them going through. So that's the other place to store your wealth. It's a great choice, but is right now a great choice to be putting it in real estate. The next choice is going to be the stock market. When you take this $1,200 check from the government, you put it in your bank. The bank then gives out a bunch of loans on that money, so it just gets multiplied and multiplied out of thin air. The commercial banks actually print more money than the Fed does because they have no limits on them anymore. They used to say, 10% was already a joke to hold that in the vault under fractional reserve banking. If you haven't watched fractional reserve banking, I have a video on that. If you go back to my channel, to the playlist, there's a playlist called Future of Money, and there's a fractional reserve banking video in there, and I think it might be worth your while. But the banks are printing more money than the Fed is printing. People are talking about, $8 trillion the Fed has printed in the past 4 or 5 months. Has been insane. Well, that money is then multiplied by the banks, tenfold, if not more. So the real person printing the money, which is why I keep recommending that book, Modern Money Economics, up there. The real people printing the money is the commercial banks. And that's why they get bailed out. Because if all of us went to the bank to get our money out, they couldn't provide it. They couldn't give us our money. It's my opinion that kind of resembles a Ponzi scheme. But the reason they get bailed out is because the people would lose their money if we all went back to get our money out of the bank because they've loaned out our money. But anyway, the reason the stock market has been pumping is because we're funneling all of this newfound printed money into this market. But it's only so obvious that it's been diluted. The stock market might be going up, but it's diluted. The dollar is being diluted. So it's not that this silver bar has gone from being valued at, $12 an ounce to being 27 plus right now. Where's silver at right now? I got my little Kitco here pulled up. Gold's a little bit under $19.50 an ounce, and silver's a little bit over $27 an ounce. So, silver has more than doubled from its low at the beginning of the pandemic. Now, obviously, a lot of us didn't catch that bottom, but that's why I want to get into my buying strategy next and why I actually did pick that bottom a bit through cost averaging. But we're going to get into that. But again, it's not that the dollar has, it's not that the precious metals are going up in value. It's that it's taking more dollars to buy them. It's not that the stocks are going up in value. It's that it's taking more diluted dollars to buy these stocks, or this money is being funneled and diluted so that the stocks are going up and being inflated. This is just very simple economics here, and I just want to very much so simplify it. So these are our options really on storing our wealth. You know, first we have a bank, next we got real estate, next we got the stock market, and then we have tangible assets, collectibles, precious metals, things of that nature. Personally, I love the idea of precious metals, especially for a insurance policy against hyperinflation. So why did I go over all of that and try to simplify all of that? The options on where to store your wealth is very limited. So to consistently buy precious metals is a good choice. It's not about picking the bottom. It's not about the perfect timing. It's about consistently buying precious metals and holding it as a hedge against hyperinflation. It's about knowing the thesis of what's going on with money. If you're printing and printing and printing money, eventually it's going to dilute. When it dilutes, everything is going to cost more money. Cars are going to cost more money. Gas is going to cost more money. This computer is going to cost more money. These phones are going to cost more money. Everything's going to cost more money when the dollar is being diluted. So that's what makes storing your wealth here such a good choice, in my personal opinion, and why I do it personally. Another thing I want you to know about me is I really, really put my money where my mouth is. Why have I been gone over 2 weeks? Because I am feeling it. This volatility in the precious metals market, I am feeling it. It is my heart. My heart. I'm surprised I have hair. Like I got myself in this thing here. I'm surprised I have hair right now. It's been insanity. Absolute insanity. So again, our options on where to store our money is very limited. That's why I find precious metals to be such a good place to park your money, and why I do it personally and why I put my money where my mouth is. I hope that if you watch my videos, you can see that. Now, I have been a big buyer of silver. I've loved silver for being so undervalued on the gold to silver ratio. The gold to silver ratio, if you watch that video I made, and this is, you know, I don't want to make those videos like, I called it, told you so, you know, but if you go back and you watch my videos, I hope that I've stayed consistent, and I hope you see the gains that I'm making in my company and with my personal buys. I have been very bullish silver. I have a cost average on silver in the mid-teens, and I'm talking on thousands and thousands of ounces of silver. And I don't want to be the guy trying to brag or whatever. It's just, I do this with my own money. I put my money where my mouth is. I think silver is still very undervalued. When I just checked, the silver to gold ratio is a bit over 70. Now, my target, if you've watched my videos, has always been 30. The silver to gold ratio back in 2011, when gold hit its all-time high at 1920, silver hit the all-time high of 48, and that gold to silver ratio at the time was 30-1, roughly. Right now, gold is past that all-time high in 2011. That was 1920. Now, it reached way over that and nearly hit 2,100 an ounce, but it's still at 1950 an ounce right now, and that's over the all-time high in 2011. Now, at the same time, back in 2011, silver ran parallel. It ran parallel. It was 48, you know, so it was at its all-time high. Why is silver still at over a 70-1 ratio? Why is silver at 27 when gold is over its all-time high in 2011? Why is it not at least 48 where it was in 2011? Now, a lot of people don't know this about silver, but silver is actually more rare than gold. You see this little gold bar and you go, dang, that 10-ounce gold bar right there is $20,000. This huge silver bar is only, you know, $3,000. If you're talking about melt price, you know, this only is $2,700, you know, and this is 20 grand, you know, this has got to be more rare. You know, this has got to be more rare. And if you're talking about in the dirt, yeah, it's more rare. But above ground, there's a lot of people don't know that silver is a lot more rare than gold. And I love gold. I'm a big gold bull. I have quite a bit of gold. But silver is more rare above ground because it's an industrial metal. 90% of it is used in industry. So a lot of it ends up in a landfill and gets used. Whereas gold just gets stored since the beginning of man. You know, we find this shiny gold metal and we go, wow, that's shiny. put it in the safe. You know, wow, that's shiny. Put it in the central bank, you know? And right now, the central banks are gobbling up gold because they're seeing the dollar devaluing. They're seeing the dollar diluting. So it's not just the people buying gold. It's the commercial banks buying gold and getting themselves hedged for a possible dilution event, which it seems pretty ripe for that. You know, and going into a new election, they're going to probably do everything they can to keep the stock market up, which means diluting and diluting and diluting the dollar. And we see with our 401ks, you know, I don't like talking politics or anything, but I just like to talk about what's going on, like genuinely what's happening. You're seeing Trump on the news talking about the 401ks. You know, if you believed in the stock market, the 401ks are safe. And yes, they're safe if you look at the number. If you're just looking at the number. But if you look at what's behind the smoke and mirrors, behind that number, the dollars that were buying those stocks have been diluted based on printing so much of it. I mean, our deficit was at 20 trillion, and I was thinking it was crazy then. I was a silver precious metals bull then. That's why my strategy hasn't changed. It's been the same since before the pandemic. It didn't take the pandemic for me to be excited about precious metals and form an entire company and quit every single thing I was doing to build a company in precious metals. I loved precious metals from the moment I laid eyes on it 5 years ago. I loved it. And I love it now. And my thesis hasn't changed at all. I've always thought the dollar should be back to something. I've always thought fiat currency is a bit of a crazy game. So my thesis hasn't changed at all. And that's what I really wanted to press in this video. And specifically now, the dollar is being very, very diluted, even more so than it was back then. I mean, to go from 20 trillion on the deficit to nearing 28 trillion on the deficit, and then printing more and more and more, it's like we're going to hit 30 trillion on the deficit in no time. And this is why I disagreed with Yankee stacking, is he used this as a reason why precious metals would crash. That makes no sense, because precious metals will go up when you're diluting the dollar. Everything will cost more money. Specifically, precious metals is extremely undervalued. More specifically, platinum and silver, in my opinion, is extremely undervalued. But everything is going to cost more money. Everything, because the dollar is being diluted. That's not going to cause a crash. That's going to cause the stock market to inflate. It's what we're seeing right now is a silent crash. We're seeing the dollar being diluted, but the stock market is looking like it's pumping. You know, the real tax is the hidden tax of inflation. That you get money in the front, but you don't realize what's getting taken out of your back pocket. That's inflation. That's what's happening here. And I wouldn't be surprised to see that we go into hyperinflation, because it's only so obvious. It's only so obvious, you know, we've printed so much of it. So back to the main topic. Don't get caught up in buying precious metals, you know, at the dip. You know, if you're, am I buying it at the all-time high? Am I buying it at the dip? Develop a thesis. And this is what I'm doing personally with my money here. I develop a thesis, and I stick to that thesis. That's really all it is. And my thesis is fiat currency is crazy, and it is devaluing day in, day out. The dollar is being devalued. So I want to store my money in places that it's hard to get these assets. It's hard to mine platinum. It is hard to mine silver and gold. There is a limited amount of it. So to actually have your money stored there, I find that to be a great insurance play. You know, a lot of us say it's insurance, but really right now it's a bit of an investment. I mean, silver, if you bought in silver at 12 and now it's at 27, if you were able to consistently buy all along, you're killing it right now. You're killing it. So that's a bit of an investment. When you see over 100% returns, that's a bit of an investment, but it's a great insurance against hyperinflation as well. I find of all of the options that I told you about where to store money, I find the best option, the last option that I didn't talk about, and if you watch my other videos, is building your own business. For me, it's knocking out two birds with one stone, being in the precious metals business and being a lover of precious metals, because I get to help people get in precious metals, and I get to hoard precious metals, and I get to enjoy it before it leaves. So I'm extremely passionate about precious metals, and that's why I founded Mineral Exchange, and that's why I am a precious metals trader day in, day out. Now, another thing I wanted to talk about is the chains in precious metals. Whenever precious metals drops, and this is why I believe in having a consistent strategy in precious metals, because when precious metals drops, when we saw silver tank to 12 at the beginning of the pandemic, the price of silver was not 12. The price of physical silver was like 15, 16 because the premiums were through the roof. Now, when it fell from 29 to 24 and change, the same thing happened. Silver was still costing 27, 28 an ounce when it was down at 24. So if you were sitting there and waiting for the perfect opportunity, as a full-time precious metals trader, I can tell you that was a bad idea. And that's why I called out Yankee stacking back when he posted that video, because I know that, I mean, I'll put some screenshots up in this video to show the back and forth. And I wasn't going to really, I was just going to make this video and not touch on that, but he kind of like went back and liked a comment of mine when silver was at 24. And then on top of it, he posted a video saying, told you so, told you so. And it's like, no, you didn't. You know that you can go back to your video. Or should I go into that right now? But the reason I'm really bringing that up is because having that strategy of waiting for the perfect opportunity to get in precious metals is a losing strategy. If I waited for the perfect opportunity to get in precious metals, I would not have made very much money. But I consistently buy what I think is undervalued. I consistently buy because I can't pick a bottom. I'm not a guru. I don't know when the perfect opportunity is going to arise, but I do know as a precious metals trader that when it falls, the premiums skyrocket. So you might as well had been buying all along. That's another little preview. You know, just recently when silver fell to 24, I backed up the truck. If you follow me on precious metals, you see the photos I've posted on my social media. I backed up the truck on silver when it fell to 24. You know, I bought as much as I could. And I can tell you right now, it wasn't cheap. The premiums were up there. But the reason I bought in is because I know how hard the distribution was to get silver. Every time it drops, the supply of silver goes out and there's no silver to be found and the premiums go up. So because I know that, I buy when it dips like that. You know, and I consistently buy. So what is that saying? These are limited items here. Develop a consistent strategy, develop a consistent thesis. That is what I do personally. I can't tell you when the top is going to hit. I can't tell you when the bottom is going to hit. All I can say is that these items are undervalued, and those bank items, I go here when I talk about the bank for some reason, these fiat currency items, these dollars, are diluted. These aren't diluted. Until we see some catastrophic asteroid event come and bring a bunch of gold down or whatever, these are limited items here. There's not a very large amount of it. Into the subject with Yankee stacking, I think I've gotten that out of the way and what my strategies are on precious metals. I will elaborate more in future videos on these specific precious metals that I'm buying and all of that. But the situation with Yankee stacking is he made a video, and you can go to his channel. He made a video saying, do this with silver now. And at the time, it was July 22nd, I believe, and you can check the date on the post. And again, I'm not trying to trash on him. I'm not trying to beat him up. This video reached out to like over 50,000 people. So what I'm trying to do is the few subscribers that I have, I want to give you real information, and I want you to understand that all of the information out there, don't take it to heart. Take everything with a grain of salt, including mine. But it was July 22nd. Silver at the time on July 22nd, you can check the chart. I believe it was 21 and change. Silver, then his idea in this video was silver is going to have a dramatic pullback to the range of 15% of something like that. And it's going to go to the teens. He said silver is going into the teens again. This is back at 21 and change. Silver then flies to 29 an ounce. And in this video, I specifically commented, I said, hey, this might not age well. And I'll put a screenshot of that here. You know, I said, hey, this might not age well. You know, the ship, you know, is kind of sailed when it broke 20, and I think you should develop a consistent buying strategy, which I have said in the past, back when silver was 18, and I said, hey, develop a consistent buying strategy for silver. I think it's really undervalued. You know, I like to stay consistent. You know, I don't wait for any perfect opportunity. But then silver goes to 29 an ounce, And I'm excited. You know, I feel it. When it goes up $1, I feel it. Trust me, I got quite a bit of silver, quite a bit of precious metals. Then falls from 29 to 24. And like I said, the premiums then skyrocketed to 27, 28. So if you were actually in the precious metals business, you would know that the premiums were through the roof. It's not like you buy it at spot price. It's not like that's the way that physical precious metals work. It goes for a premium. So when it fell, he went back and liked an old comment of mine to be like, haha, I told you so. And then Yankee went and made a post saying, I told you so. And that's what really like got under my skin. It's like when it fell to 24, you went and liked one of my comments. And when metals falls, when metals fall, I feel it. It hurts. Like I got a lot, you know, and when it goes up, I feel it. I'm jumping for joy. So I'm very excited. And I'm a consistent buyer all along. This whole journey, I've been a consistent buyer for the past 5 years. So when you went and liked that comment, it got under my skin. But then you made the post saying, I told you so, when you were extremely incorrect and factually incorrect. So if you go back to the video, I'm talking about your video that was actually, I think it's one of your most viewed videos, which is very scary because a lot of people watch that. I know this is just for entertainment, education purposes, but this is where it goes into a situation where you have to understand that this was strictly for entertainment purposes. This video, I hope, was only for entertainment purposes because you said there's going to be the perfect buying opportunity for silver for you to load your Yankee silver up down in the teens. You specifically said teens. It was at 21 and change. It rocket shipped to 29, almost 30. And then it pulled back to 24. And you said, I told you so at 24 when you made the video at 21 and change. You do know that you can go and check the date of a video that you posted. And somebody along the lines is going to factually check that. I don't think that I think that it was kind of a little bit embarrassing to make a post saying I told you so while you liked comments of mine to try to like spit in my face a little bit when it fell. It's like you were wrong. What I said was right and what you said was dramatically incorrect. So then when you posted that, I'm like, all right, now I have to address this because for YouTubers out there, it's important to know that these videos are for educational entertainment only. That's it. So take in all the information that you get and then draw your own thesis. Don't take anyone's like sayings to heart, including mine. And I try to make sure that I stay consistent. I try to make sure that I put my money where my mouth is, which is why I challenged Yankee to a gentleman's bet for charity of a 100-ounce bar. If it goes to 15, he wins. If it goes to 31st, I win. And it's getting, I don't know, he never took me on it, but it's just a charity. I said it was going to be a giveaway to charity. You know, one of us gives away a 100-ounce bar to charity, whoever's right. I think he said actually that was a little bit too much for him or something like that. But I want you all to know that I put my money where my mouth is, and I really genuinely believe in my strategy. Again, be careful on the information you absorb and really take it in and then draw your own conclusion. And this is not to just bag on Yankee because I'm a subscriber of his. I don't know if you're a subscriber of mine, but I'm a subscriber of yours, and I have been a subscriber of yours and many other metals pages. So you make great videos, and I'm a fan, but you were wrong here. It would be better to not call me odd for calling you out and make a video saying I was wrong. I was wrong. Metals went up. It would have been a better idea to be consistently buying precious metals. That would be the right thing to do. You know, it wouldn't be the right thing to do to see someone call you out on being, hey, this is factually incorrect. You didn't call this. You called for it to go down to the teens and you were wrong. So what are you saying you called it for? I have to address it because anyone can go back to that video where you say, do this with silver now, to 50,000 views, and you were dramatically wrong. That's when I had to say something because you then, on top of it, you had to rub it in on top of that. So it's like, all right. Maybe it goes to the teens and you can say I was right, but I highly doubt that. I highly doubt that, because all along, and if it did do that, I can tell you firsthand that the premiums would go through the roof. So the overall advice was not only factually incorrect, and you did not call anything, you actually gave out bad information, but it's also a bad strategy overall to wait for it. No one, that's why the term comes, grab a knife, catch a falling knife. That's where that term comes from, because nobody really can catch it, and you don't really want to catch it. It's a bad strategy. You want to just consistently buy what you believe in. If the people on Tesla back at 300 were saying, oh, it's going to perfectly be the time at 180 is going to be the time for me to buy in, whereas the other person's like, no, I believe in Tesla cars, I'm just going to consistently buy it. And then now it's up almost at 2,000 a share. It's like you just want to be a consistent buyer of what you genuinely believe in my personal opinion. That's the video. Thank you all so much for being a subscriber here. Again, I'm so excited about being at 500 subscribers. I will see you all at the next video. I hope you found some value in this, enough value to smash that like button. And I know I say that all the time, but it really does help if you smash the like button. More people will see this video. Off to the next one. See you at the next video. Off to the next one. See you at the next video. I'm not cutting that out. I'm going to leave it there. All right. Have a great day, everybody. Thanks again for watching. Signing out.